wanted to talk to you about dividends, ex-dividend dates, trading options on stocks that pay a dividend, and how you have to interpret what ex-dividend means. It's always been confusing to me, so I just want to spend a couple minutes on that definition and do a couple trade setups on short and long-term opportunities to trade stocks that pay dividends and how to use them to your advantage. So let's jump right in. We'll talk about the definitions, then we'll show you a bunch of trade setups as we go along. So here we go. You know what a dividend is. Let's back into what an ex-dividend date is and why that is so darn important. And in fact, it's not the ex-dividend date, it's the day before the ex-dividend date that's actually pretty critical. So read the definition here. The ex-dividend date is one of 4 stages the companies go through to pay a dividend. The ex-dividend date is important because it determines whether the buyer of a stock will be entitled to receive the upcoming, typically quarterly dividend. This is right out of Investopedia. So let's look at the 4 stages of a dividend and key into the fact that these dates are very important and chronologically in order here. So the declaration date is very simple. The board of directors gets together, agrees that we're going to pay a quarterly dividend. They put a press release out. This is on Emerson. They are declaring their quarterly dividend on August the 2nd by way of example. And they're going to pay it on September 9th to shareholders of record on August the 12th. And so there's 3 different dates right there, but there's 4 different dates and stages of a dividend, and nobody, even in the press release, mentions the ex-dividend date, which is, in my mind, pretty darn important. So let's go through the definitions and the takeaway as it relates to a dividend stock and a ex-dividend date and what it means to you. So the record date, you just saw it in that press release right there. It's basically saying, look, we're examining the books and records of who is on our shareholder list and who's eligible to receive the dividend. And so they put a date associated with that right up here. As this example goes, their record date is August the 6th. So what's an ex-dividend date? So keep in mind, this is super important. The 3rd stage is the ex-dividend date, which is the date that determines which shareholders will be entitled. And so typically the ex-dividend date is set 1 business day before the record date. Notice this kind of chronological, 1 business day before the record date. Shareholders who bought the stock, read this carefully, who bought the stock on the ex-dividend date or after will not receive the dividend. So here, the important takeaway, obviously, is if you're going to own that stock, you have to actually buy the stock by close of business the day before the ex-dividend date. And the reason is simply because the settlement system in the United States takes 2 days to settle all the transactions. So that's why they look 2 days back from the record date, 1 day back from the ex-dividend date. And so when you hear the word ex-dividend date, know that people that buy the stock on the ex-dividend date aren't eligible to receive the dividend that's just been declared. You have to own the stock the day before the ex-dividend date. In my mind, they should put 5 stages. And the 5th stage would be, I guess, titled the day before the ex-dividend date if you want that dividend. So of course the 4th stage is the date that's payable, and that typically comes out on the press releases as well. So that's the important takeaway of what an ex-dividend date really is. It's really to ensure that you are in the record books on the right day, right? To make sure you're eligible for the recently announced quarterly dividend. 2 days before the record date, 1 day before the ex-dividend date. That's how you got to make sure you get into the shareholder list 1 day before the ex-dividend date. And so where do you find this information? So this is the TastyWorks platform. Here's how you find it on the TastyWorks platform. Type in the symbol in the upper left-hand column. Open the information box on the right-hand side. Go to Overview, and right there it shows dividend, 0.51 per share, and the ex-dividend date. On the Thinkorswim platform, it's similar but a little bit different. You're going to type in the symbol. You're going to go to the Trade tab. You're going to open up the underlying section, And there it is, right there. It's even more specific, right? Because it is specific to say ex-dividend date on that particular time frame. Pretty cool. All right, so if you want a list of ex-dividend dates coming up, there's a website. There's a website for everything. Take a look at that one. That'll give you upcoming ex-dividend dates in case you want to play a short-term opportunity and get a dividend and only own the shares for a short period of time. Here's that trade setup. So in this particular trade setup, this is a 5-day expiration period. We're going to go out the day before the ex-dividend date. We're going to buy 100 shares. We're also going to sell a call against that purchase to lower our average price per share by, in this case, $1. So the price of the stock at the time I took the screenshot was selling at $90.38, but because we're going to receive at least $1 in premiums against that call, it lowers our price to $8,900. But here's the cool part, right? You do this on the day before the ex-dividend date, you're going to get that 51.5 cents in a few weeks from now, regardless of what happens to this trade, including if on the ex-dividend date, 1 day later, you decide to sell these shares and to sell the call because you made a profit on this particular strategy, you're still going to get the ex-dividend date dividend on this one, just you have to hold for a couple of weeks, right? So it actually goes to lowering your break even. Even though this platform setup says the break even is 89.10 on those 100 shares, it's actually 89.10 minus another 50 bucks, right? Because you have a dividend coming to you, which puts your break even at a lower level, which gives you a little bit more safety and security in this trade. And so a lot of people play these ex-dividend date trades with very short-term nature, get in and out very quickly, own the shares for a day or two, and then take the dividend and move on to redeploy their capital in another way. So I like trading dividend aristocrat stocks, and I like long-term trades that actually give me at least the amount of premium that I would get if I own that stock for a full year. As though I own the stock, I'd be getting the dividend. And so here's 3 different trade setups on how I do this. So this is again EMR. This is now an option that's going to expire in 313 days, simulating basically a 365-day period or a full year or 4 quarterly dividends. So notice I do the quick math of 51 cents per quarter times 4 is basically what, $2.04 over the course of 4 quarters or a year. Well, look what I can do. I can sell a naked put when the stock is trading at 90 bucks a share. I can go out to a 65 strike, 1 contract, and receive almost identical to what I would have received if I owned the stock. My probability of success is large, and the amount of buying power that's restricted on a trade like this is $660 with regular T margin. If you're on portfolio margin, it's even better than that. So my point is this: I'm able to deploy $660 and receive $204, $205 against $660. My return on investment, I'm just doing quick math, is in the 30 plus category. Pretty darn good for a 1-year period. The only risk I have is if EMR drops below $65 a share, which is right at the, I'm just going to call it the 5 delta, give or take. Unlikely that it will occur. It's 85% chance that it will not occur, right? But I have to take possession of those shares. And because this happens to be a dividend aristocrat stock, which by definition has increased its dividend for the last minimum 25 years and ongoing, there's only like 60 plus, 65, 66 of those stocks that have done it. Feel pretty secure that if it dips below that level, 65, which is way below where it's trading at 90 right now, I'm going to recover not only the principal, but I'm going to make the dividend. So here's my way of deploying $660 to essentially own or feel like I get 4 quarterly dividend stocks from a stock that I, again, don't have to tie too much capital up in. Here's another trade setup. It's a little bit different. It's going to restrict a little bit more buying power, but your max loss is a lot less. It's a put spread, similar concept. I'm going to go and sell a contract, again, at 313 days at the 70 strike, but I'm going to buy some protection at the 50 strike. But the key point here is $2.75 in premium that I get minus 95 cents to buy this protective put. I'm going to get a $1.80, right? If my math is correct, not quite $204 like a dividend, but pretty darn close. But my max loss in case Emerson falls out of bed is only $1,800. But again, I get to get $180 over restricted buying power of $798, which is a lot less being tied up if you own the shares. Again, all I'm doing here is trying to simulate owning a Dividend Aristocrat stock for a full year, tying up as little capital as I can, but receiving at least equal to or pretty darn close to what it would be like if I would receive 4 quarterly dividends. Lastly, here's one more way of looking at it. I think it's more conservative because the strike price is that further away from where the stock is trading, but I've had to do what? I've had to sell 2 contracts instead of 1 in each one of those. My max loss is higher, but what's the likelihood of Emerson going out of business in the next 313 days? Pretty darn low. Probability of profit, 94%, right? This is way outside of the expected move during this period of time. And so what do my numbers look like? I'm going to get 115, right? Sorry for my scribble, times 2 contracts, $2.30 times 100 shares. That's $230 over what I would get if I owned the stock for a full year. My buying power restricted is $1,115. Quick math, what is that, 19% on a position that I'm unlikely to be tested on, yet I feel like I've got 4 dividends on Emerson stock. So those are ways I play ex-dividend dates and dividend earning shares from an options perspective. I hope you've enjoyed this. Let me know if you have any questions. You can email me at ernie@dorianway.com. Thank you very much.